What is going on, family? Welcome back to the channel. And our boy Trump is at it again. What are the implications of the latest spill from the Greenland situation? In addition to that, what are the likely impacts in the market, the spillover, and of course, is this a situation to be concerned about when markets open? And can we draw parallels with Venezuela? So smash the video, critically important. For those of you that are holding crypto or stocks, I think this video will help out a lot of people on Sunday, the 18th of January. So let's get stuck into it straight away. The mathematics are very much straightforward. The market will only care if it's an impact event on growth, if it's on inflation, if it's on interest rates, or any other macro data that is released. Right now, when the news events are such, then the market does care. So in this situation, there will obviously be a knee-jerk reaction when the futures and of course the markets open at midnight, probably more dramatic than what we saw with Venezuela, mainly because Venezuela is economically irrelevant completely. Now, Trump has obviously history of tariffs. Of course, there is a massive timeline for the Trump tariffs. And without the knee-jerk reaction, Venezuela is not a parallel here. The only thing that mattered there was oil. And that was even incredibly nuanced at best. And this is why I think the market moved very quickly and did not give a shit about the situation in Venezuela. When we wake up tomorrow and we look at the market, the response will imply tariffs being back on the countries cooperating with Denmark, of course, Greenland. The first thing I'd say is this is extremely noisy, and it always is with the Trump administration. I'm not getting into any politics here or opinions, but Trump's personality, of course, it's irrelevant. We focus on the fact, the credible sources, and what we focus on here is the implications for the markets. At this stage, the proposal 10% tariffs on European countries that cooperate with the Danish government over Greenland issues are pushed until they fall. Don't forget, it's a pressure tactic. We've seen this many times with Trump, and that's his playbook. And that causes a lot of concern for rather European or weak European countries. Of course, you saw the situation where they landed 15 soldiers, one from each country, and Francois or Emmanuel Macron going over there to give a speech. So it is absolutely a joke. If the United States of America wants Greenland, it will get it. But at what cost is the question. Of course, there is a degree of European independence, NATO allies, all the decorum. Trump doesn't give a shit about that, as we already know. Okay, so there is that proposal, and that's what sent us into the oblivion back on October the 10th, Trump tariffs. So something to note is, of course, if the Europeans don't fold, I think it could be a longer, more persistent problem throughout the reign or what's remaining of the Trump term, which is just getting going. We know Trump is an aggressive negotiator. We know he pushes very hard. He uses leverage. And then he walks it all back and he comes to an agreement, a deal. He's a deal maker. And this is exactly how these tariffs are designed to work, right? Straight away, put the pressure on and then walk it back, put the threats on, walk it back. And if they don't comply, keep pushing them. Greenland obviously opens a new can of worms, right? That we didn't need. If the Supreme Court hasn't struck down the Trump tariffs as yet, and he's got alternative avenues as well, expect more of this. But it is a can of worms that we don't need. Protests, speculations, misunderstandings. Markets don't trade on emotions alone. They trade on economic impact. And it's very clear in the very short term, markets will not like the talk of more tariff implications. It is uncertainty. And this is why, professionals are trying to, set their course right now and not be the heroes. I think in my book, the hedge is very clear. It's all well and good for, for those of you who are here in the short term. Of course, any traders can flip coins and you can trade on the short term, but I wouldn't take any significant trades right now. And if I'm deploying USDC or USDT, I would wait for the market to perhaps even come back and retest this green line here, which is around $90,000, right? That is what I would personally do, because at the very least anyway, Bitcoin has had a tremendous bounce since we kind of said the low was around November 21st candle, which is a very high volume candle. So what should we do here? Futures will likely to drop. Equities will likely come under pressure. Gold and silver will likely rally. All standard knee-jerk macro reaction, but we need more information. One final point. Regardless of whether Trump is likable or unlikable, right? It doesn't matter. History shows he's all about aggressive deal making, ultimately aimed at economic strength and, of course, America first. If you zoom out, it's a global chessboard. Greenland is just a strategic point for rare earths, and of course, it will soon be forgotten about regardless of where it goes. So all I'm saying to you, my friends, is if you are holding any significant trade positions, be careful. If you are DCAing, by all means, hold your dollar. And if you are, of course, holding a lot of altcoins, if anything is in profit or close to an average breaking point, this is not the only moment. Unless you're having a long-term DCA plan, I would certainly be swapping some of those for either core projects or stable coins, right? I'm not calling for a dump, but that's the natural thing to do. But he does have, historically, he's always been very aggressive with these, right? So he began his second term with a 25% tariff threat on Mexico, of course, and Canada, 10% for Chinese imports. And February, March, when we saw the massive drop, there was an announcement of reciprocal Trump tariffs to match the other countries' tax rates on U.S. goods. He increased the steel tariff to 25%, aluminium, as we say, to 10%. Of course, Canada, Mexico, China, all threatening retaliatory measures. Major Trump implications, or implementations, I should say, rather, reciprocal. That's the word. I mean, what do the Europeans come back with? And that's what we need to watch out for. Recent developments, of course, May granted a relief auto industry through a repaid program. Notably, the US and China have agreed a 90-day truce May the 12th. This was back then, of course, rolling back most of the tariffs, reducing the 145% rate on Chinese goods to 30% and China's 125% rate to 10%. Trump also threatened tariffs on the likes of Apple. Everyone's getting it, basically. So do expect unnecessary market volatility tomorrow. Of course, be very careful. Long term, we want to know where the direction is. But one thing's for sure, at the end of the day, unless you're trading recklessly, those have been here for a while, DCAing into their projects, it may be a good opportunity. Of course, we could also be heading in the opposite direction, but I can see Bitcoin's oversold now on the daily anyway. So take care, guys. Be safe out there.